we have a financial analysis. I said analysis, I apologize. Financial analysis. What do you think, what are we going to use for financial analysis? First, we're going to use the income statement that we worked on last week, and we're going to use the balance sheet, as well as we're going to use the cash flow statement. And the reason why we're going to use those three, because it shows whether or not a business is a good investment, as well as stable, the stability of a business. Now, one of the things, look, summarize the key financial measures for the first 3 years of operation compared to industry standards. So, when they say industry standards, you want to look at other industries, cash flow statements, balance sheets, and income statements. The reason why, you want to make sure you get into a stable industry. Because sometimes the bottom will fall out of an industry. You know, you just look at Blockbuster. Look at Blockbuster, they're shutting down their doors. Hollywood Videos. The standalone movie rental stores, the bottom fell out of it. The bottom fell out. What if you was getting ready to open up a movie rental store, but on a smaller scale? If the industry leaders are not doing well, you can look at those three statements and they give you that information. All right. Now let's look at the definition of financial analysis. The process of evaluating businesses, projects, budgets, and other financial related entities to determine their suitability for investment. When they say suitability for investment, is it a good investment? Simple as that. Is it a good investment? Typically, financial analysis is used to analyze whether the entity is stable, solvent, liquid, or profitable enough to be invested in. When looking at a specific company, the financial analysts will often focus on their income statement, balance sheet, cash flow statement. In addition, one key area of financial analysis involves extrapolating the company's past performance into an estimate of the company's future performance. So basically, you're going to extract a company's information from the past. Their historical record, their historical past, and you're going to try to predict. Well, guess what? The world's not suitable. Things are constantly changing. But for you all's business, look at where they're going now. Look at where they're at currently. Also, look and see what type of government regulations is maybe. You want to try to. That's what I'm trying to say. When I say government regulation, you want to see the government regulation for that industry or against that industry. Because a lot of times, a business could be doing good today. A case in point, a company that I worked for was a for-profit in the for-profit education sector. It was doing real good, but then the government started lobbying against them. As a result, they was trading in the 200s. It was stock traded, public traded company. Now the government started lobbying against their industry. Now their stock is at $50-something, and you're talking about in 2.5 years. So don't put so much energy on a company's past performance, but put more energy on the company's future, present and future. If you look at the present, where they're going, and what impact and sales. You want to basically just trying to find out what is the impact when you're doing these financial analysis. It's this simple as that. When you're doing a financial analysis on your company, when you're doing one on your company, it is where you think you're going to be at, based off of how much money you have coming in. So remember that when you're doing your financial, and be true. Be true. Don't inflate the numbers. Be true and genuine. If you're not going to make a whole lot of money, it's better to say I'm only profiting $10,000 per year than to say you're profiting $100,000, and that's horrible. And that's what some businesses do, because they want to look better than what they are. Keep the numbers real. Keep your numbers real, and you will do good. And you will do good, because if you profit $10,000, guess what? You're successful. Now you're going to figure out a way to increase those profits. And that, my friend, is the financial analysis. And we're going to stop And we're going to move on to the next slide, which is what? Product development costs.